Kelowna home prices plummeted $30,000 in November, and the benchmark price dipped below $1 million for the first time in over a year. Is this just the seasonal dip that we expect to see this time of year, or have higher interest rates finally had an impact on prices and is pushing them down? In this video, we'll take a look at what my market of Kelowna did in November 2023 and try and figure out if we're seeing a new trend or if this is just normal market behavior. Make sure you stick around to the end because I'll let you know if I think now is a good time to buy. I'm Tyrell, a realtor in Kelowna, and if you're new to the channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you get any value out of today's video, remember to subscribe and hit that like button so that other people like you can see this video too. Let's take a look at what the Kelowna market did in November. If we take a look at the sales volume, 2023 has seen fewer sales than 2022, and certainly more than we saw in 2019. But what's interesting about this graph is it shows us that the last quarter of every year, sales do decline. Month over month, sales do go down as we approach the end of the year, and it's not something to worry about because it's normal market behavior. You are going to hear that sales are down month over month, and that's certainly true nearly every year. And if we take a look at the active listings, typically at the end of the year, they decline as well. But what's interesting is if you look at 2023, which is the yellow line there, our inventory has been pretty flat over the last 4 to 5 months. And for the first time in 3 years, we actually have more active inventory than we had pre-pandemic. Now, I would argue that not all of this inventory is saleable inventory. Sure, there's some great products on the market right now and those are selling, but there are still some things that I wouldn't consider saleable because they're either priced a little too high or the sellers have them aspirationally priced. Looking at the list to sale ratio can be important because this can give us an indication where prices are headed. Right now in the single-family detached home market, we're sitting at a list-to-sale ratio of about 41%, which means that 40% of homes listed are selling within a given month, but 60% aren't. Still, this is considered a balanced market and there shouldn't be too much pressure on prices to go up or down. If we look at townhomes, we're sitting at 32% list-to-sale ratio, which is right on the edge of being a balanced or a buyer's market, so we could start to see some pressure in the coming months for prices of townhomes to come down. And the same can be said about the condo market, which is sitting at a list-to-sale ratio of 29%, again, right on the edge of that balanced and buyer's market. The benchmark price of a single-family detached home in November was $991,000. That's a decline of 1.6% from November of 2022 when we were just over $1 million. If we look at the month-over-month change, that's down 3.3% from $1,025,000. This is a key development when it comes to minimum down payments. See, when your selling price is over $1 million, you have to put down 20% of the total purchase price to qualify at minimum for a mortgage. But when that price is under $1 million, all that's required as a minimum down payment is 5% of the first $500,000 and 10% of the remainder. So that means in October, you needed a minimum down payment of at least $200,000. But now in November, because our benchmark price for an average home is under $1 million, the minimum down payment required to qualify for a home is $124,000. Sure, your mortgage payments will differ in there, but if you're worried about the amount of money that you have to have saved up for a down payment, this is a great development for you as a buyer. Still, when we look at the benchmark price over 3 years, you can see an upward trend towards the right where prices over time will appreciate. If we look at the last quarter, there is a small trend here that prices have been going down, but I do believe that that's a seasonal softening in prices which we see typically every year. If we take a look at the benchmark price of a townhome, it was up in November by 2.3% to $756,000. But as we saw earlier, we're getting closer to a buyer's market in the townhome market, and I think that we may see some softening in these prices over the next couple of months. Still, looking at the benchmark price of a townhome over the last 3 years, you can see that the prices have slowly appreciated. When we look at condos, the benchmark price in November was $496,000, which is down 4.1% from the previous month. If we look at the minimum down payment required for a condo, now that that price is under $500,000, you're only required to put down 5% at minimum to qualify for a mortgage, which amounts to just over $24,000. The benchmark price again in condos over the last 3 years has increased and it is higher than it was 3 years ago. It will be interesting to keep track of what's going on with inventory in condos and the prices over the next few months, as new short-term rental regulations are coming from the provincial government and the city of Kelowna. If those new regulations really restrict what people can do with short-term rentals, we may see a large amount of these homes flood the market, which will increase our inventory and could put downward pressure on prices. That would be great news for first-time buyers and people looking to get on the property ladder. Not such great news for those investors that own those, but if you remember, we looked at the benchmark price, and if they've had them for 3 years, they still made a profit on their investment. The last thing we should look at is average days to sell, which has been increasing over the last 6 months. If you're looking to sell your single-family detached home, you can expect to take on average 58 days for the home to sell. If you're selling a townhome, the average is 51 days, and if you're looking at selling a condo, it's about 53 days. The aggregate selling price to list price comes in at 93%. This is the price that buyers are paying versus what the list price was, and on average, buyers are getting a discount of 7% off the asking price. I mentioned at the beginning of the video I'd let you know if I thought that now was a good time to buy, and well, the answer is it depends. If you need a roof over your head, a place to sleep, and you plan on being in your home for 3 to 5 years or longer, then absolutely now is a good time to buy. Prices will probably soften a little bit over the next couple of months, but not significantly enough that it's going to make a difference to you in the long term. And interest rates are probably going to go down in 2024, like many economists are predicting. And when that happens, there's a lot of pent-up buyer demand, and those buyers are going to jump into the market, increase sales, and that's going to result in prices going up. If you can afford the payment now, and you can find a home that suits you and you think you can live there long term, then it's probably not a bad idea to buy now. On the other hand, if you're going to be in it for the short term, or you do think the prices are still going to come down significantly or crash, then now's probably not a good time to buy. At the end of the day, it depends on your situation. And this is why I offer a no obligation discovery call so you can explore your options. If that's something that you'd be interested in, hit the first link in the description where you can book a time that works best for you.